Good evening, this is Dwayne, CFRN. Today is the 30th day of July 2013, and it's roughly 11:56 p.m. Pacific time. And you're probably wondering, what's anybody in their right mind doing up this time of night making a video? Well, funny you should ask. I made a 30-minute daily recap video this afternoon, and I just finished rendering it. That's probably more information than you need, but for some reason the audio, well, it didn't render. So here I am back making this video again. I guess in theory it should be easier the second time around, right? Alright, let's see. I'm going to move through this quickly because the hour is late. And I'm aggravated because I'm having to do it a second time. But oh well. Alright, that's enough whining. Let's move on. Again, today is Tuesday, 30th day of July, 2013. Here is the Globex open on Sunday night. Price sold off on Globex. Pretty quiet session. The high was up around 88, and then the low was down at our zone at 82.83. It's about a 6-point range on the Globex open. Certainly tradable. We went sideways once we hit the zone for 1, 2, 3, 4, about 13 hours is what it amounts to. Now these weekly zones that you see on the chart, they are emailed out to the CFRN partners before the market opens every Monday morning via email. And once they're published, once they go out, they are, for lack of a better term, cast in stone. We don't change them, edit them, update them, manipulate them. They are. Okay? Alright. So, price rolls sideways for 13 hours into Monday morning, into the Wall Street session. And during the live trading room, I did send out a tweet. Now, in the live trading room, we're taking trade after trade after trade. We have a daily goal of 2 points, which we typically get most days very early on. But we continue to trade during those 2 hours because it is a teaching and training environment. We are trading real money in real time in front of real people. If you've not taken our free trial, it's very easy to do so. Simply go to cfrn.net/apply. Okay? I'll show it to you real quick here. CFRN.net. And on this page, you can go and take a look at our trading room results for the last couple of years. Let me show you the apply page right here. This will allow you to take the free trial. No obligation, no credit card required. Just put in your name, your email address, register. You'll get an automated email response with the instructions that you need to be in the live trading room for 5 days. Download the platform, install the indicators, everything that we offer on the free trial. Okay? That's all it takes. Now, I will say this. Google has rolled out a new addition to Gmail. So if you're on Gmail, you're already painfully aware of this. A lot of your email is now playing hide and seek in a folder called the Promotions folder. That's right, the Promotions folder. Whenever someone sends you an automated response, and that's what we do when you sign up for the free trial, you get an automated response that says, are you sure? Do you really want to take this free trial? And the reason is we hate spam as much as you do, so we use what's called a double opt-in process. Again, more information than you probably need or want, but it's done for your protection as well as ours. Okay, so you gotta click the link, you gotta confirm that you really do want it, and then we'll send you the real deal. This is where I sit down and manually send you out an email that has the link and the password and videos and all kinds of stuff. Okay, so there. Now, moving on. We sent a tweet out during the live trading room Monday morning that said consider being short below 16.79. As the crow flies, price dropped 2.5 points. But something unusual happened, okay? See this weekly trading zone down here? Once price has made this much of a commitment, see, we expect price to consolidate and coil at a weekly trading zone. That's what they're all about. It's areas in the market where we foresee the market doing this exact thing. Pausing, coiling, thinking, making up its mind if it's going to proceed on up to the next rung on the ladder, or if it's going to retreat to this rung. Okay? For it to stop 2.5 points shy of the zone is very unusual. If you go and look at historical charts on our blog going back many years, you'll see how unusual this behavior is. Okay, but hey, it happens, so you got to live with it, right? Well, here's where it gets really interesting. We go back up to the zone. We consolidate again for 1, 2, 3, 4, 5 hours. We roll sideways. We do the pattern, which is just basically that, and that. You'll see me do that almost every day if you hang around, because that pattern repeats itself over and over, and if you learn to spot that pattern as it's setting up, it's a great little moneymaker. Okay, so we go sideways, we bounce, we pull back into the zone, we find that support, we make a run, and we don't get to the zone. Well, wait a minute. Once, okay. Twice, what? Wait a minute. 2.5 points on each side? Yeah. It's like a mirror image. What's happening, this is a phenomena, if that's a good word for this. I guess it is. Good enough. Sometimes a weekly trading zone will become like a center of gravity, with price oscillating from one side to the other, like this. Okay? Hope we're not setting up for an entire week of this. That would just be sad. So, today's only Tuesday. Well, by the time you watch this video, it's Wednesday. So that's half the week. Let's see. Now, let me back up to this trade here. There was 2.5 points as the crow flies. And for us, that's a great day's pay. Okay, we'll take that any day. 2 points is a powerful income. Now, you might say, well, 2 points, if I'm trading one contract, that's only $100. Exactly. And you should only be trading $100 or one contract when you first go live. Sometimes people get the wrong impression that the way to financial success in the E-mini markets is to get more points. It's not. It's to earn your way into trading more contracts. You stay in our simulator until you're consistently profitable. You then graduate to one contract live. You trade only one contract until you've earned $1,000 in the market. Once you've accomplished that, you bump it up to 2 contracts. You now trade live until you've made another 1,000. And you work your way up until you find your comfort zone. It will take a few months to get to whatever comfort zone, wherever you will ultimately level out. Now, you might level out for a few months and then start to add again. Okay? And each person's unique. It's an individual thing. We'll help you as you work through that process. You simply have to promise us, if you're going to come get an education with us, become a CFRN partner, you have to promise us that you're going to stick to that plan. Because otherwise, it's not going to end well for you. And that's not why we're here. We don't want to support or encourage bad habits. Stay in the simulator until you're consistently profitable. I mean, what's the point of going live if you're not consistently profitable? There is no reason. But our mind plays tricks on us. And that's all in the psychology of trading. And we'll talk about that too if you decide to become a partner. Okay. This trade here, while it did give the 2.5 points, let's get up close, because that was an hourly chart. Okay. Most folks don't trade intraday day trades on an hourly. We use it as a backdrop to our trades. Let me show you what I mean. Okay. Our basic trade setup, there's 5 pieces to the puzzle. Okay. In this instance, there's a bullish cross, price pulls away, price pulls back. We check for bearish divergence, we look for a down close below the trend line, and we're in. Okay? Here's that tweet, 1679. Now, right here, where the CFMA1, that's the colorful name we gave our primary indicator, when it crosses over the green line, the BBC, another very colorful name, it stands for bull bear cross. What happens when the red line crosses the green line? Color coded for your convenience. The bears have taken control. The sellers are now running the show. They have the ball. They're in possession. Okay? And they're going to try to run it down the field as far as they can. The second that this happens, we know that that transfer of power has taken place. We can define it to the tick. We know who's in control. I can sit down in front of any market at any time of the day or night, and within a matter of seconds, I know who's in control, who has the ball. Now, that doesn't tell me if there's a trade setup. I have to look a little closer than that. But I at least know initially at a glance who's running the show right now. And right now, it's the bears. If I climb on board, I can ride this thing down, pick myself up a couple points plus some, no problem. But there is a problem. This trade entry here is an ambiguous entry. It's a nebulous entry. It's an area where one might consider getting short. That's not how we do business. Our trade setups are to the tick. There's no ambiguity. We don't fade the trade. We don't get in a tick early or any of that kind of business. All right. This trade here, it fulfilled all of our criteria except one thing. See, this down close right here, this green candle, which is what we needed to enter the trade, that candle closed at 1678.75. That would have been the price where we would have entered the market short to the tick. See, we know to the tick, 1678.75. No ambiguity. The reason we didn't enter the trade is because this little black line, which is called the step line, had been drawn up into the green line. That negates the setup. See, the slingshot, which is what this trade setup is called, it's good at not only getting you into high probability trades, it's also very good at keeping you out of a trade that has lost its high probability edge. This trade lost its edge right here. Now, quite frankly, the cycle indicator at the bottom, when it changed to blue, now this is still, as long as the cycle is below the green line on this lower panel, that is bearish. But when it changes to blue, we lose part of the edge. That's why we had to drag in the trend line to try to reconfirm our edge to make sure we really want to be in this trade. And sure enough, it bought us just enough time, one more candle, for the black line to pull up into the green line, and all bets are off. There's simply no trade. Now, guys that have been around a while, you've been a partner for a while, you understand this transfer of power. You know how to get into this trade. You know how to run this thing. But for a new person, we're not going to train them with that type of ambiguity. We're going to give you trade setups that are clearly defined to the tick. All right? Never wonder again if you should be in or not, and if you should be in, at what price, because it's right on the screen. Okay? Now, look what happened here. There was another transfer of power. The bulls, or the buyers, have now taken possession because this little line, the CFMA1, has crossed above the green line. Over here it was below. Right there, it's above. Transfer of power. Buyers are in control, and we're looking to get long. Okay, what do we need? Bullish cross, got it. Need price to pull away, got it. Need price to pull back to the BBC, got it. Check for bullish divergence this time, got it. Got it. It's looking pretty good. Alright, so what do I need? I need an up close. Let's see, we touch right here. Okay. I need an up close above the trend line. So that's a down close. By the time I get an up close, right there, that same thing has happened. This black line has come down. Okay. Was there 2 points to be had in the trade? There was. Okay. If you had entered on this candle, oh, you know what? Let me get that trend line out of the way and let me show you something here. Okay, over here, see on the candle that pulled back and touched where I've got the yellow arrow? You see how the cycle down here has turned blue? We all know that red is bearish, blue is bullish, right? Okay, so even though it's positioned properly below the green line, it's not quite as strong now because the color's changed, okay? Alright, so over here, now let's look at this. On this pullback, right here, where we touch, okay, if we look down, the cycle indicator is still blue. It hasn't turned red. So all we need is an up close right here. I had marked this chart improperly. That is a valid trade entry right there. Okay, an up close. So we're entering this trade on the open of this candle, and it opens at 1679.75. We immediately have a drawdown to 1678.50. Okay. Again, the entry. See, we have the up close here. The cycle is still blue. It didn't change colors on us. So we enter on the open of this candle. This candle opens at 79.75. We're long. We have a drawdown to 78.50. Now, we never risk more than 8 ticks on a trade using the slingshot. So this gets us long, and we have 2 points to run. Wait, do we? The open is 79.75. Yes. Open 70. Yeah, we have exactly 2 points to run up to the zone. Okay? So that's that trade. Nice little 2-point trade. Here, we had the tweet, which gave us 2.5. It just didn't give us a slingshot entry. Over here, going back up, we actually got the slingshot entry. We pulled back here. We had an up close here. This candle here opened at 79.75. So there's 2.25 points room to run, and we always have to have at least 2 points room to run before we get to a zone. Otherwise, we won't trade it. Okay? Because on every trade, we're looking for at least 2 points or 8 ticks, depending upon the market we're trading in. And no matter what market we're trading in, we never risk more than 8 ticks. Let's get into today. Well, actually now yesterday, Tuesday, because according to the little clock, it's now Wednesday morning, a.m. Price hits the zone and bounces. We have a tweet, which would have been Monday night, right, that went out, that said consider being long above 89. Well, price, the swing high was 88.5. Why 89? Why did we choose 89? Well, we need to be above the fray, okay? And here's the fray. We got to be above that to consider getting long. If you go and look at that tweet, it says consider being long at 89, but it also says be prepared to take your profits at 91. It's only a 2-point trade. But again, that's all we're looking for on any given day. 2 points. And this would have been it if it had triggered, but it didn't trigger. So, I mean, we were trading, we were putting on trades in the live trading room. I'm just talking about from this bigger picture perspective. Price comes down during the radio show today. I said, all right, guys, there's a possibility that buyers will come in early. Why would they come in early to run this up? Well, because yesterday, when price got down to 76.50, there was such buying pressure, we couldn't even get to the zone. They ran this thing up 12 points. That's quite a feat. Nice paycheck. Okay? And so as price comes back in to visit this area again, only natural that buyers will come in and attempt to do that very same thing. Run it up, grab another 12 points. Okay? Did they come in early? They did. See? Here's that low. Look at the red line on my cursor. Now, we were prepared in the event that the buyers did not show up and did not run it up. We talked about this during the radio broadcast. We were going to short 76 down to the zone at 74, grab a couple points there. Once it became evident that the buyers were coming in early, we went to our 4-tick range chart, and this is what we found. Let me scoot up to the proper day. Okay. This is buyers coming in early. This is the bulls taking control. Remember, we're able to define that transfer of power to the tick, okay, right here. The buyers start coming in here, but they don't take control. The balance of power doesn't shift until right here, okay? So we get a bullish cross, price pulls away, price pulls back. We need the cycle down here did not change color. All we need is an up close, and we get it on this candle right here. Now the up close on this candle is 1680.75, and that's a problem. Why, you ask? Why is that a problem? Well, you see, from the open of this candle, 80.75, we don't have 2 points of room to run up to this zone. We only have 1.25 points. Now, the slingshot trade requires 8 ticks of risk. We're not going to enter a trade where we're risking 8 ticks in order to get 1.25 points. That's just not good business. So, when this happened, I was lamenting to the radio audience, "Aw, we're going to miss this one." I said, wouldn't it be nice if the market were so kind that it would just draw back and give us an entry at 1680 so we could still take this trade up to the zone at 82. And, you know, sometimes life's stranger than fiction, because we couldn't take our entry here because there wasn't enough room to run. Lo and behold, price pulled right back to 1680, gave us our entry. It continued to draw down 2 more ticks to 79.5, and then there was just a most beautiful little trade, 2 points right up to the zone. Sometimes good things do happen to good people, right? And so that's the last couple of days for us. Since Globex opened, or in the afternoon session after the radio show, we bounced around here in this zone for a bit. We broke out to the upside. Let's take a look at this trade. Was this tradable? Bullish cross, price pulls away, price pulls back. Let's check for bullish divergence. We don't have any. Therefore, we don't have a trade. See, this is what bullish divergence looks like. This red and blue line is above the green line. Bearish divergence looks like this. The red and blue line is below the green line. Over here, when price pulls back right here, these two are tied up in some kind of a lover's knot or something. We got nothing. Was there a nice trade? Yeah. And is it possible for our more advanced traders to still take advantage of this? Yeah. But if you're learning to trade the slingshot, this is not going to meet the criteria. You're going to have to wait this trade out. You'll learn how to take this trade, don't worry. But in the beginning, you're going to sit it out. Okay? And here we are on Wednesday morning at 12:20 now a.m. and we're watching the market bop along at the top of this zone. In order to get a long trade, there's some work to be done. There has to be a bullish cross, which looks like this. In other words, a transfer of power. Right now, the bears have the power, which is an interesting dynamic. The bears have the ball, but we're sitting right on top of this zone, which will be good support until proven different. And this is perfect bearish divergence. Okay, so this thing is set up for a powerful move down, with one big caveat: we don't trade into weekly trading zones, because again, we have to expect this to be support until proven otherwise, and the only thing that can prove otherwise is actual price movement. So we have to wait it out and see. Now let's go back to the hourly chart. This is Sunday night. This is the weekly zone that we're dealing with, 82.83. It's the same zone we're dealing with right here, right now, tonight, 82.83. All the market has done since the Globex open, it went from here to here to here to here to here. Now look at the Sunday night Globex close, which was right here. Price was at the weekly trading zone Sunday night on the Globex close. Monday night at midnight, well, it wasn't the Globex close, I'm sorry, this is the Globex open, but this is midnight where it became the 29th. Okay, let me get a specific. Actually, I stand corrected. This is the Globex open. I was looking at Monday's line. Okay, price came down into the zone Sunday night. Now this is Monday morning, midnight. Okay, this is where we go from Sunday to Monday right here. Price is in this zone. Okay, we make the move down, the move up, and this is where Monday becomes Tuesday, this line right here. And in the wee hours, we're right back in that zone. And now we're in the wee hours of Wednesday morning. Let's see, right. Now, I'm on Pacific time, by the way. This candle right here. So let me go ahead and put my daily separator on. There we go. You can automate that, by the way. You don't have to put those on manually. That's if you can put it on at all. Come on. It's not that hard. There we go. Alright. So this was Tuesday. Now we're rolling into Wednesday, and we're right at the zone. So what are we going to do overnight? Is there a trade? Well, you know, in all good conscience, I can't really give you anything other than what we've already put out. It's just the way the week has shaped up. It's the dynamic that we're dealing with. In order to be long, I need to see price clear this area up here at 89, and still that only gives me 2 points room to run up to 91. Not crazy about that, but now the other side of the coin is you could get in here at 83 long and trade it up to 87. See, that's 5 points. But in order to do that, you've got to get a bullish cross. You got to have a number of things happen to set that trade up, to set that move up, if you will. Okay. Now it's trying. See, the little step line just hooked up. Okay. Now this divergence is all wrong. So there's a lot of work that has to be done. And it could happen as we move into the London Open. It could very well happen. All right. Tomorrow's Fed announcement, big news there. We have, I think, GDP tomorrow morning or some other big news report that can move the market. But from here, the only safe trade, and I'm not crazy about that term, would be 89 to 91, and down here 76 to 74. I wish I had something better for you, but I can only share with you what the market shows and what the market itself is offering at any given time. So that's it. That's our recap for this day, Tuesday, 30th day of July, now the 31st day of July, 2013. And I'll see you tomorrow morning in the live trading room. Thanks so much. Oh, by the way, take the free trial, cfrn.net/apply. It's really that easy. No credit card required.